Well, hi everyone and welcome to TOOP TV. We're here in Wellington Square at North Adelaide, and very appropriately so, because coming up shortly on SA's finest is a beautiful home just a stone throw away on Jeffcott Street. Also coming up in the show on TOOP's Tips is finishing a renovation, and that's looking at the end of the process at North Adelaide. And finally, don't forget, we're live and interactive, so get those questions rolling in either by phone or email and we'll answer them at the end of the show. Well, once again, we're looking at some of that terrific property that's coming onto the market at the moment. And I've got to remind you that you must get our new TOOP app. Download that from the App Store. It is fantastic when you're searching for property, especially when you're standing out in front of the signboard of the property you're looking at. You can download the photos and so forth. It is just the best thing and a must-have in terms of searching for the properties. Later on the show, the advertiser's Anthony Keane is on talking about some financial considerations you might have in becoming a landlord. And now, let's go to the inside story on home renovations.
The DIY craze is taking off in South Australia, with record amounts being spent on home improvements. The Housing Industry Association's latest report shows hundreds of millions of dollars was spent on kitchen and bathroom renovations in the 2009-2010 financial year. This trend is giving the real estate market a boost, with restored properties performing well and many buyers searching for a renovator's delight.
Oh, everybody should do it. I think there's money in it. Yeah. If you do it in the right area, right in the right price code, like I reckon within $500,000–600,000 range at the moment, you make money here.
This industry doesn't appear to be slowing anytime soon, with the cost of constructions predicted to steadily rise into 2012. But keen renovators should approach any big projects with caution, as the cracks may start to appear sooner than you think.
It's exciting to start with, and unfortunately it can become quite disappointing because the tradespeople don't usually come to the party.
We lived through it, so it was a bit traumatic. We went through 42-degree heat wave, and then 2 weeks later hailstorms with no roofs.
As I say, unless you know what you're doing, forget it. You know, they see on TV how easy it is to do things, but you know, it's not that easy.
Stay tuned, because later in the show we'll be giving you tips on how to complete your home renovation, and we'll take a look at how a home from the 1900s has been transformed into a modern-day masterpiece.
Well, good luck to you DIYers out there, because I reckon it's hard yards sorting out those renovations, and certainly past experience suggests that sticking with the professionals and what they know and how to get things done is certainly a good way to go. But good luck with all of that. Now, joining me on the show at the moment is Tony Romano. Tony, good to have you here.
Thanks, Tim. Good to be here.
Good. Tony is a financier with the ANZ Bank, and most importantly, an important client of TOOP+TOOP's as a landlord. So Tony, perhaps in terms of your professional background, would you like to give us a bit of a background and understanding of what you're up to?
Sure. Look, I'm a financial planner with the ANZ Bank.
Mm-hmm.
I've been there for around 28 years now, so
right.
Part of the institution now,
Yes.
I think. So, but basically what I do is I provide a fee-based service for my clients. I have about 200 clients that I look after. We look after their wealth creation, their investments. We look after insurance for them, setting up self-managed superannuation funds. Anything to do with financial planning I look after for people, and take them from where they are to hopefully retirement or beyond.
Nice.
That spade. So in terms of what that involves, it may involve property, it may involve shares, it may involve a mixture of different asset classes.
Mm-hmm.
So I cover all those things, and one of the reasons obviously I'm here is because of my property, but you know, the financial planning I do for my clients, I do for myself as well. So that's part of my retirement planning as well.
Good work. And previously we had a little quick chat. Sure. And you mentioned that there's a good little bit of study gone into getting where you are now. What are your qualifications?
No, that's right. I mean, in terms of being a financial planner now, I've got a degree in economics from Adelaide University, as well as a graduate diploma in financial planning, which gives me the ability to be able to work as a financial planner. Yep. And also a graduate diploma in finance and investment through the Securities Institute of Australia. So basically these days I think you've got to be qualified so you're able to understand the concepts that you talk to your customers about.
Yep.
Yeah.
Nice work. All right. Well, to bring it back to our property base,
sure.
Perhaps, and put your landlord's cap on,
Yep.
if you like.
Sure.
Perhaps, I know you own a number of properties, but let's step back to the first one, way back. Tell us about the steps involved in getting into the first property, maybe a little bit of the fears in getting involved, and why you did it and so forth.
Sure. I guess I can always remember the first one because you always remember the first one, but that was in 1984. I purchased a block of land at Flagstaff Hill, and we've got 8 properties now that we have with TOOP. So that first property, I guess there's always a bit of trepidation because you're thinking, okay, I'm buying a block of land here and there's no income return from it, and I can leave it in the bank. So there's a little bit of fear and trepidation, and also you're a little bit younger as well. But back then, just to give you an idea, properties, blocks of land were between $18,000 and $24,000. So quite cheap compared to today's standards. But actually, if you apply the inflation rate over the last 26 years, that would take properties up to 200 plus today. So this is one of the things. I mean, you've got a lot of the trepidation is taken out when you think, okay, if I don't get in today, it's more likely the way things have gone over the long term, because that's when you invest in property and or shares long term, they're going to increase in value along the way. You get fluctuations, of course, along that journey, but a lot of those fears and trepidations were taken away with that first one. I've since built on that property, and I've since done a number of other developments on properties that I've purchased as well through home builders as well, which are now properties that I've tenanted out. So those fears were allayed because I went through the process with the first one and build on the first one, talk to the builder, okay, what's involved, what are the costs involved, what are the risks involved? What sort of things should I look for in terms of protecting my income to make sure if something happened to me, I can make sure I can still meet the repayments on that. But then obviously I've transferred a lot of that debt, which is a personal debt now, into investment debt. So I'll call it good debt versus bad debt.
And as you've gone along, you mentioned you've got 8 properties and acquired along the way. What sort of plans and steps have you put in place to make sure that the next property can come along relatively quickly, and how do you protect yourself in making the decision to buy the next one?
Sure. I guess there's a couple of aspects there with that. I mean, basically buying into property early and getting the capital growth on that property has been a real boon. I mean, property markets, if you take it over 15, 20 years, have increased just as much as the share market has increased. And that's been over probably 15% on average year on year. So that equity that you create allows you or gives you the ability to be able to go to the banks or go to the finances and say, look, I need to borrow X amount of dollars because I want to buy another property or develop here somewhere else. That property will then provide the income flow, hopefully to provide pay the debt back. Obviously interest only, for example. A lot of those loans that I did it on were interest only because it is now tax deductible debt for me, which is great. So in a lot of those instances, it's about having the cash flow. So you protect your cash flow either from the property or from your income, which is able to give you the ability to be able to buy those properties in the first place. Secondly, it's been the increase in the equity of the property. That's been the major factor over time, which has allowed me to go into the next one. And thirdly, has been actually going through the process on each one and knowing all the steps involved and all the risks involved. I mean, sure, things can go wrong with individual properties, but generally, if you go through all the steps, you experience and you know what to look for with the next one.
Okay. As we sort of wind this section up, some tips for people who are looking to get into a portfolio.
Okay, I guess I look at the tips as being good practice, I suppose. Firstly is research. I mean, research where you're going to be. I mean, is it close to schools and shops, and is it close, because if you're looking to have that property for a rental, I mean, you want to maximise the amount of income you're getting from it.
Certainly.
And then the capital growth will follow along the way anyway. So research is really important. Having a good agent. I mean, I'm time poor as it comes to looking after the properties myself. I mean, they do the research, TOOP do the research for me. I mean, they research the tenants, they research the ability to be able to pay the rent. They research the fact that they've got a good job. They research the fact that they've got the ability to be able to sort of look after properties because they get references from other landlords. So all those things are huge factors for me. And that research then provides you with the comfort of then moving into that particular area and saying, okay, look, I'm happy to go into that because I know there's going to be a regular cash flow. There's things like, how do I buy the property? Do I buy it in the name of myself? Do I buy it in the name of a super fund? Do I buy it in the name of a trust? Do I buy it in joint names? And what are the tax implications?
Yeah.
Because there can be some huge costs involved if you don't do it right.
Yes.
In actually unwinding a scenario, paying extra stamp duty or paying extra costs to then do it the right way.
Yep.
So it's important to get advice, not only from the agent, but also get advice from regarding the property, but get advice from your accountant regarding taxation, or your financial planner regarding how to structure it to fit in within your particular wealth requirements.
It's a good point, and that's something that I think we might drill down on further in another episode as we move forward. Just stay with us, Tony, because there's some questions coming up later in the show. But in the meantime, we're going to go behind the blinds.